Hi, thanks so much for joining in. You're watching the Mutual Fund Show on NDTV Profit, and my name is Alex Matthew. This show is geared towards getting you better insight into your investments into mutual funds. But from the start of this month, a lot of you have been unable to transact. And in fact, you've been restricted in some cases with regard to investing in new mutual fund schemes. All of this relates to changes in the norms related to KYC. And we'll talk about why that is. If you are unaware of this, then you are in the third of three camps, as I see it, of investors. The first is annoyed, the second is resigned, and the third is blissfully unaware. But the bottom line is that you need to fix these issues. And to that end, it's important to identify why these issues are cropping up in the first place. I'm joined on this show by Swarup Mohanty, the Chief Executive Officer of Mirae Asset Mutual Fund. Thank you so much, Swarup, as always, for taking the time. Let's talk about why this has occurred and what the context is, and we'll also try and get the mutual fund perspective, because I'm sure you guys are not happy with the implications in terms of flows. So first, why is this issue cropping up?
See, Alex, first of all, thank you so much for having me on your show on such a important topic as we speak. But we mutual fund guys come with our own disclaimers, so let me put my disclaimer up first. There are two types of people, the lawmaker and the law follower. I am a law follower, so I'm in the second category. I am resigned to the fact that if something is laid down by law, I just follow it. And in this case, the ideology of, considering that you have to move to a Aadhaar-based KYC process is something which is proving to be a bottleneck, because a lot of investors of the past had used other verification documents for their verified status. Now, when you're asking them to again redo the process and move to an Aadhaar-based person, let me put the other perspective also, that today the Aadhaar is the universally accepted KYC, is a reality. So the new law now says that let's move to this process, and that's where this thing of again having to redo your KYC process is proving to be a bit of an issue for many people in the market.
Okay, let's talk about the various statuses, because this is now quite a big debate on social media platforms. Everyone's wondering what is happening. And you kind of explained this already, but I want to make this crystal clear. If you used another document, another validation document, identity proof, like for example a passport or a driving license or even a PAN card, you will need to do this again with the Aadhaar, and that was something that kicked in on the 1st of April. But you fall into three categories as I understand it, Swarup, correct me if I'm wrong. Either you are verified, in which case you have done an Aadhaar eKYC already and you are not supposed to do anything. You are registered, in which case you have used, if I'm not mistaken, the PAN, and you can continue to invest in existing folios, but you can't do fresh investments. And the third is you are on hold. Can you explain the third?
Yeah, so if you have not verified the respective documents, or you have not been verified, as you rightly pointed out, the first one is when you are validated. I mean, see, at the outset, Alex, let's understand one thing. Why the Aadhaar? Because the Aadhaar is the only document that can be revalidated by the UADI or the concerned government authority. That's why the preference of the Aadhaar. Now, if you've used PAN or any other documents and you continue to invest, so there is this allowance of continuing to invest in the respective fund houses, and those people will have issues in investing in new fund houses. That's where it comes in. The third one is where you are put on hold, meaning that your documentation is not in place as per the new verification process. It has a very simple way of doing it, easier said than done for many, but it's very important that the investor now goes onto the respective websites. I think AMFI has just sent out a very interesting pamphlet which simplifies that whole thing. Go and first check your status on CVL-KRA or any of the other websites. And as per your status, which will read either you are validated or you are verified or you are on hold, then go about redoing the whole thing as per the instructions of your status.
CVL-KRA is essentially the place that you go. It's www.cvlkra.com, and you have to enter your PAN number to identify.
In the KYC status?
Yeah,
you
in
can
the KYC status.
Give you your status.
And then the further steps beyond that. The question is, why couldn't this have been done better? Because as I understand it, Swarup, a large number of investors, particularly the do-it-yourself investors, were completely unaware of this, and they found out post the 1st of April when they tried to make a transaction and it failed for whatever reason. In certain cases, they have been unable to redeem as well, which is a bit of a problem because you're trying to, in certain cases, get money out of a liquid fund situationally. Anecdotally, we found out that money was required, it's not available. This could have been done better.
See, Alex, I know many people will not like it when I say whatever I'm going to say. Finally, a lot of these laws come in to safeguard the person's money. And finally, it's the person's own money. And today, it is true that your Aadhaar is your first step to, or your first kind of go-to method of safeguarding your own identity, your own verification process. And when that is put in place over the other documentation that you've submitted, you can be of two things. Hey, let me now safeguard my money and go the other way. Or I can then say, this is a bit of a problem. Why am I being asked to do it? It is true that one has to always aspire to safeguard one's money. And today's digital world, you are then subject to a lot of, or you are prone to a lot of frauds that are happening as we speak. And it's in the selfish interest of the investor that they safeguard or create a moat of safety around the money that they have. And we are seeing instances where such frauds are happening. And hence, probably the regulator thought it is time to take this step or take the plunge of cleaning up this act. Now, every process can be done better. Let's be very honest on this. It is this from a data of 4.3 crore folios is a huge task. There is no denying that. And I'm completely with people who are, say the NRIs or probably senior citizens sitting out of smaller cities who are clueless as to why or how this has happened. But this is an essential step. And if it is to safeguard my own money, when I went and re-registered myself, I saw the process, and it's not exactly easy for me, who's part of the industry, who has had to do it. Sometimes the servers are down, and I've gone through all that. But if I come from the single motive of how do I safeguard my own money in its truest form, then this is a necessary step is where I come from.
Okay. Can the industry do anything to facilitate this? I'm asking from the perspective of making it easier for the groups of individuals that you've pointed out to. NRIs, I don't see how they're going to resolve a situation. Of course, they have valid documents which they have to use to do the re-KYC, even if they don't have an Aadhaar. But old people, I would think, are going to find it difficult. So is there anything that the industry can do? And I also want to find, I'm curious, mutual funds would have seen quite a big impact in the kind of flows that they would normally get through lump sums in fresh folios. Is that going to be witnessed in the funds, in the fund flows in the month of April?
See, Alex, I think something which you referred to is very important, and I'm of the camp that fresh inflows, whether it's impacted or not, is not the bigger issue. Mm-hmm. Redemption should not be stopped.
Yes,
is where I come from. That's something which we need to talk and address very quickly. Somebody needs money. As an industry, we've always taken pride of how liquid we are. In the entire COVID period, we paid each penny that was required. And this, if it's an hindrance, that is where our first point of action should be. And the AMFI is consistently talking to SEBI on this, and I'm sure we will find a way forward. I mean, when a law is put, maybe some of these practical aspects were not discussed, but I think AMFI is discussing that with the regulator. And I'm sure when we point out some valid reasons, there is no reason why the regulator will not come forward and discuss these finer points with it. But again, I repeat, if you have to be futuristic and in a new world which is digitally connected, it is in the selfish interest of the investor that today or tomorrow they move to an Aadhaar-based KYC process.
Just a last question, and this is something that is going to come up in a few days, Swarup, and where I foresee a bit of an issue. And maybe you can, weigh in on this, is that from the 30th of April, you need to have the PAN as well as the name on the mutual fund statement as the same. Is there a possibility that that this can create an issue? It's not just the name, but also the date of birth. So if there's any change or if there's any way in which a data is being filled at the mutual fund level, this can create a problem. Do you foresee any issues here?
Alex, I pointed back to you. If my name is something and my mutual fund folio is pointing otherwise, or if my name is something and my PAN is pointing some otherwise, or my other is not, it is in my selfish interest to get it corrected. Right? And that's an ownership which the investor has to take.
Yeah, but just as a follow-up to that, for example, take my name, and I don't use the full name. I'm known as Alex Matthew, but my full name is Kochupurekal Matthew Alexander, okay? And in a lot of cases, I'm also called KM Alexander. And there are a lot of people down south who have this, they just use the initials. So in certain situations, one would say that, okay, when you're filling the form, you would say, Alexander Kochupurekal, but on your PAN, it's possible that you're saved as Alexander K. There are instances where this can crop up. So you're saying that that needs to be resolved by the investor themselves?
Alex, the money comes in and goes back, right?
Yeah.
Your PAN card, your name, and your bank, most important, your bank account name have to be the same. Otherwise, you are two different individuals in the identity. Is a reality. Sooner or later, that you have to take cognizance of and correct that at a fundamental level. If they are different, then the money back to you can be questioned by your bank itself. Are you Alex M or are you Alex K is something which has to be correct as per your own name. That honestly is something which every investor has to take upon itself. Yes, there are data entry errors which we have to take ownership of. There is no doubt or debate on that. But I think technology is sorting it out today. If you see the KRA, just the basic change of address, and I did a fair amount of them online recently. I didn't have to fill in anything. The backend took care of it on its own. But if my name is not the same on my PAN or Aadhaar or my bank account, I have to correct it as on yesterday. Otherwise, I'm not going to get my money back. Is a reality. Your bank will reject it.
Absolutely. That's a fair point. And we started out with three camps, Swarup, annoyed, resigned, and blissfully unaware. Hopefully, after this program, there are fewer that fall in the third camp, and most people gravitate towards the second camp, as you pointed out. Thank you so much for taking the time.
Thank you for having me, Alex. We have to clean up our data. It's a huge task. But it is in the interest of the investor. And after going through all the debates, this is my conclusion. I'm just being honest on this one.
Yeah, no, that's fair. That's a fair point. Thank you so much once again for taking the time. We're talking about what might just be a painful process for you, the re-KYC if you're investing in mutual funds. And we've talked about what the issue is. Joining me now to talk about this and a couple more topics, I've got Prableen Bajpai, who's the founder of FinFix. Prableen, you deal with a lot of investors. What would you say that it's fair that a bulk of them are facing issues like this?
Good afternoon, Alex. Yeah, investors are facing issues, and we at the back end are helping them. And so a lot of that is passed on to, I think, the intermediaries like us who are helping and who deal with investors. But yes, in the month of March, actually, Alex, we did get mails regarding the KYC list, where the officially valid documents were not used. I mean, earlier, of course, they were the officially valid documents, but now which are not in that list. And we started working on those. But as we've moved into April, there have been some surprises where, everything seemed okay, but probably the emails or mobiles were not validated. And, since the 1st of April, this started, all the mechanisms were not in place. So with each day, for example, I've just recently saw that, AMFI has now come out with a graphic, how it is distributed, the current status of investors. The links came up later. So I would say probably, it's been a bit of a chaotic time, the month so far. And I think it will take another, a month or so to actually get everything streamlined and resolved. And especially for investors where NRIs are involved, senior citizens are involved, and where there is a difference in the name currently, even in the Aadhaar and PAN. So yeah, we are all working towards it. There are mechanisms which are helping us, more links coming up for validations. But in a lot of cases where they say that modifications can be submitted like an additional document, the CAMs and CARVI offices, they are not very on ground. They are saying that it's better that we resubmit KYCs. So it is a lot of work which is going on at the back.
As things stand right now, Prableen, and I will ask you separately about NRIs, but as things stand in your experience, what is the best way to go about this? How do you go about this? So first of all, of course, we've already established you go onto the website to check the status of your KYC, and once you get the idea of the status, you move forward. But assume that you are, you have status of on hold, or you have a registered status. In your opinion, what's the best way to proceed?
Alex, for example, if obviously the document, so, three groups here basically. That number one, that if you had submitted your bank statement or your utility bill long time back, and your email and your mobile was probably different, or you had given your BSNL number back then, let's say in 2010 or 2008, even with a valid document, it'll go under hold because, you've not been able to validate that. So I think, of course, you check your status. That is important. If a number is coming that, 09 or some other number is written under the address proof, which is given, that means that you kind of have to do the whole KYC again. If it is written as Aadhaar or passport, then of course, a passport is, for example, still a valid document. Then there is a validation link in the CVL KRA website, and you go on that, you put your PAN, so it will show you whether your Aadhaar and PAN are linked, whether your Gmail, your email and your mobile is validated or not. So you proceed with that. But for example, if your emails and your mobiles have changed, then you again have to resubmit the new mobile or your email. So in cases where something is getting stuck, I think the better way is to just resubmit your KYC so that you're good for the times ahead. And it's strange, Alex, that, I'll point out because, I was listening to Swarup. Aadhaar, in our own, my experience, was not actually taken as the only proof of address till a few months back. And we were told that, no, in addition to Aadhaar, you submit something else as well. And now the only document that they want is Aadhaar. So it's, I feel that there has not been too much of uniformity the way the whole thing has been managed.
It's unfortunate. And see, and unfortunately, look, it doesn't change the fact that mutual funds are in fact one of the best investments or instruments that you can use. And so therefore, the only way to use them is to get this done. And we've talked about some ways in which you can. Now, one of the statuses that you have is the registered status, in which you are allowed to transact in the folios that you currently have, but you cannot make new investments or you cannot get new folios. That is, you cannot buy what you don't have or go to mutual fund schemes that you don't currently have. But it got me thinking, right, Prableen? Of course, you have to fix that situation, but there are people with a whole host of folios, and we've spoken about this often. Weirdly enough, they are going to be forced to stick with their existing folios. Is that such a bad thing?
A little thing, on the brighter side here, definitely,
yeah,
Alex,
that's
because, we keep saying that even in the same fund house, people go and tend to create a new folio. So, for example, if they're investing in ICICI, probably they have 5 different folios from 5 different schemes. And that is actually not right. So it's good, number one, that, probably you look at your portfolio and say that, okay, maybe I can take an incremental investment in one of the existing schemes that they have. Of course, that shouldn't be out of compulsion, but definitely it gives them a chance to review if that can be done. And the second, that Alex, the benefit of holding lesser number of folios, I think that comes up, and there is a lot of merit to it, because even in the same fund house, you can have as many schemes under the same folio, and that really adds to a lot of convenience. None of your schemes will ever get misplaced. So, with multiple brokers, with multiple distributors or agencies, you can have the same folio. And if all the details in one folio are correct, it's then, you're sorted. So you don't have different folios where you have to keep checking whether your emails, nominees are there or different in all of them. So I think definitely a lot of merit to having a single folio within the same fund house. I think that is something that investors should ideally do. And if they do have multiple folios, they should actually work towards consolidating them if the details in all the folios are same.
Okay, fair point. All right, which is not to say that you should not go out and fix the issues with your KYC. You must do that ASAP.
Absolutely, that needs to be done. And there's merit to that as well, Alex. No, little trouble here. I would agree that redemption shouldn't be affected at this stage. They have to have some mechanism to allow redemptions,
yes,
even if your KYC is on hold. I think that is a very strong case. That should be done. But otherwise, I feel that they have to now, because people are just sort of awakened that okay, this is happening. Our SIPs are going on hold. Other issues. I think the process for the some sort of facilitation should come, and the process should become more and more digitized. And I say that there has to be a central system where all our details are there, and that can be fetched by all different agencies, be it your driving license, be it your passport and everything. I think India is doing so well on that front, and this is really needed.
The point on redemptions is absolutely well taken. Why should any organization hold my money against my will simply because a document is out of place, right? But having said that, that point is made. There are a few questions that have come our way, Prableen, and I would like to take a few of those queries with you. The first one that has come in is from Hassan. He's 65 years old and he's looking for guidance. He says that he's invested 10 lakh rupees in SBI Balanced Hybrid Fund with an SWP, a systematic withdrawal plan of 6,000 rupees per month. His account statement shows a cost of investment of 8,78,224 and the current value is 10,68,000. So he's made some money on this. Is this okay, or does he need to change his SWP amount? I would think that this has to do with how much money he needs, right, Prableen?
Yeah, Alex, I think he said SBI Balanced Fund, so I'm considering as the SBI Balanced Advantage Fund, because there is also an SBI Hybrid Equity Fund. So it's a 2-year-old fund, Alex. And of course, when we do an SWP, it is ideally based on the amount that the investor needs. But in any case scenario, the percentage of withdrawal should be lesser than the growth that we are looking at for the scheme. And let's not look at the last 1 year or 2 year returns. It's important that we look at rolling returns or returns over a longer period of time. So Balanced Advantage as a category has given somewhere between 10 to 12% returns over a 10-15 year period. And the amount that he's withdrawing currently, which would be somewhere between 70,000 a year, is lesser than the growth. So his withdrawal is around 7%. So he can continue with this pace of withdrawal. But Alex, if he's trying to do an inflation-adjusted withdrawal, then his corpus would get depleted in the next 15 to 18 years.
Fair point. The next question is from Prabhanu Sikaria, and he's 29 years old. He's asking about an investment right now of 8 lakh to 10 lakh rupees with a moderate to high risk appetite. He's saying that the question assumes significance as the appraisal cycle for corporate employees just got completed with the financial year end. His current mutual fund holdings are 92% directed towards equity and 8% in debt, and the amount invested is 20 lakh. How should he manage the incremental investment, Prableen?
It's great to see, Alex, that at a young age of 29, he's investing a lot towards equities, which is great. But two things here. Number one, I hope that he has a contingency fund which holds money in an liquid fund or an FD, which is equivalent to at least 6 months of his monthly expenses. That's a must. If he doesn't have that, he should build that first. Second, that the asset allocation really needs to be checked, because 90% of his corpus is in equities, and even with the thumb rule of 100 minus your age, it is in the high risk category. So I think something that he needs to add is a large cap fund to bring down his equity, the volatility in his equity exposure. And I think that would be good for now. And if he's looking at something more moderate, then a hybrid fund would be a good addition.
Okay, fair point. Thank you so much, Prableen. We're completely out of time, and But always a pleasure having you on the program. Thank you so much for taking the time.
Thank you so much.
Viewers, that brings us to the end of this particular edition of the Mutual Fund Show. Let us know what you think and write to us if you've got any questions. In the meanwhile, stay tuned. Lots more coming up on NDTV Profit.